Bitcoin has finally gone mainstream. At least that's what Wall Street has to say. After 7 years of trying to get an institutional Bitcoin product through, it finally came through. We've seen Bitcoin crush its previous all-time high, and it is now in what is known as price discovery mode. So in this video, I want to break down what happened, what this big news was, what it really means to Wall Street, why we're seeing Bitcoin shoot so high above its previous record. I also want to dig into where the price could go, not only by the end of the year, but even into next year and the next couple of years. I want to talk about one of the most successful investors in history and what his opinion is on this, the regrets that he has. And then we'll look at a couple charts and some price predictions and see how high it can go. So let's go. All right, welcome back. If you're new to the channel, my name is Mark Moss, and I make these videos to change the way you think about money because almost everything you have learned is wrong. Now, Bitcoin is all over the news right now. Of course, obviously, it's gone to new all-time highs. Whenever that happens, everybody gets interested. Of course, I've been talking about it for about 6 or 7 years now at this point, but whenever the price shoots higher, it grabs this interest, and that is where we're at. But it's more than that right now. As a matter of fact, it's all over the news because it finally went mainstream into Wall Street. So let's take a look at some of the articles and let's dig in real quick and see what's going on. So we can see right here on Bloomberg, it says that, emboldened Bitcoin bulls shoot for the moon after topping the record. So the Bitcoin bulls, obviously, those are the ones that are pushing the price higher. And they say that they're shooting for the moon after topping the record. And that's because after we've passed the previous all-time high, that means there's no resistance. So if you're looking at technical analysis, you have support and resistance lines. Once you've passed the all-time high, there is no resistance ahead, and that's what goes into this price discovery mode. If you're a technical analysis trader, then you would look at previous, like I said, support and resistance to see where the price could potentially go. But we are in uncharted territory right now. And this was led by many things, of course, all over the news this week is that the first Bitcoin ETF has gone through. I've talked about that in a previous video. And basically what it does is it makes a very, very easy way for institutional investors to get access to Bitcoin's price. Now, in the previous video, which we can go ahead and link up here, we talked about the differences in types of ETFs, really the difference between a futures-based ETF and a spot ETF. And I gave you the differences of those and then what I think about each one. So I'm not going to cover that again in this video. Go back and watch that other video if you want to get into the differences of that. But basically, this ETF launch is, as we can see here, the successful launch of the first Bitcoin futures exchange traded fund, the ETF, is the second busiest ETF debut ever. As a matter of fact, it's only second behind a carbon traded one, which was pre-sold, so it kind of had a little bit of an unfair advantage. So it is the second best one, but due to that little asterisk, it might be the best performing one, I think. We've seen that the Bitcoin has rallied 120% just this year, and a lot of people think that $100,000 Bitcoin is in sight before the end of the year. Some people say a lot higher, and I'm going to show you what those forecasts are. We'll talk about that in a second. But we can see that Bitcoin entered 2020 having been the prior decade's best performing asset, and it gained more than 300% last year in 2020. As a matter of fact, it's been the best performing asset since its inception every single year for the last decade. And so, 300% last year. We can see that regulatory concerns from the US to China sent the crypto plunging below 30,000. So it had got up to 65,000. It crashed down into the $35,000 range when China banned all the Bitcoin mining. All the Bitcoin miners had to move out. Basically, an attack on the network shut 60% of the network down. And then as it started rebounding, then China did a complete ban on cryptocurrencies again. But we can see here that Bitcoin staged a resurgence as investors moved past these bans and crackdowns. And it grew optimistic that there wouldn't be any looming U.S. regulatory regime that would stifle the market. So we've seen in recent days, and over the last week, we've seen Jerome Powell from the Federal Reserve, and we've seen Gary Gensler from the SEC both say point blank, the U.S. government, we will not ban Bitcoin. And so that's the biggest thing that everyone says, oh, they're going to ban it. Well, they've said they're not. The United States has taken the lead in Bitcoin mining, and it looks like it's here to stay. And so it's this ProShares Bitcoin Strategy ETF has just continued to blow this up. Now, again, this is a Wall Street thing. This helps Wall Street firms get in. So I'm not super excited about it. Again, I talked about it back in that other video. Go dig into that. But what we can see here is that the Bank of New York, Mellon Bancorp, Goldman Sachs Group, Morgan Stanley, and among other firms are offering crypto-related services, even the Soros Fund Management LLC and Goldman Sachs. So what's important about this piece specifically is, again, going back to will the government ban it? Well, they've told you they won't, but we can see that we have this level of entrenchment through Wall Street. So we're talking about the largest financial institution in the United States, Goldman Sachs, Morgan Stanley, Soros Fund, etc., and they are in on Bitcoin products today. And so even if the government wanted to try to ban it, they would have this level of entrenchment. They'd have this pushback where these banks, which of course the lobbyists are the ones that push the bills through the laws. And who are the lobbyists? Well, the financial institutions, and they don't look like they want to step aside. We can see here, based on average return rates over the last 3 years for a variety of assets, including the so-called FANG stocks, those are Facebook, Apple, Netflix, Google. It says that researchers at the platform Forex posit that Bitcoin could reach a 5 trillion market value by the start of 2024. So to get to a 5 trillion market value, that's a 5x return. That's a 500% return. And so by the start of 2024, so we're basically talking in just a couple of years, you could see a 5x return based off of what they're saying. Of course, many analysts think it could go even higher. We'll look at that. We can see FundStrat's global advisors Tom Lee says that this ETF could attract 50 billion in flows in the first year, and Bitcoin could hit $168,000. That's his prediction. I want to jump over and look at Peter Thiel, what he said. So Peter Thiel is one of the most famous venture capitalist investors in the world, has hit many projects really big. And he is one of the early investors into Bitcoin. He's been very outspoken about being invested into Bitcoin and believing in it. And he says here that he underinvested in Bitcoin. And so what's interesting is he says that Peter Thiel, the technology billionaire, praised cryptocurrencies and slammed central banks. So he sees what the problem is and the solution. Bitcoin is a solution to the problems that the central banks have created. Of course, I talk about those all the time. And he says here, you're supposed to just buy Bitcoin, not trade it. You're not supposed to be a day trader. You're not trying to get in every pump. You're just supposed to buy Bitcoin. That's straight from a quote from one of the best investors in the world. And he says, I feel like I've been underinvested in it. Now, what I would say is that anytime an investment takes off and does really good, you have that feeling. I wish I would have invested more. Of course, when it crashes 50%, sometimes you're going, I wish I didn't invest as much. And so at times like this, we all wish we would have invested more. We wish we would have borrowed money. We wish we would have sold assets to buy it. But keep in mind that when it crashes, and it will again at some point, you're going to wish that you didn't invest more. So just think about that. I like this part here. Thiel said his only hesitation about investing was that he thought the secret was already known by everybody. But he concluded, I think the answers are still to go long. Maybe it still is enough of a secret. Now, what's important about this is I've been saying over and over, as a matter of fact, I've been saying that the Bitcoin is the greatest asymmetric bet. So as a real investor, you're looking for asymmetric opportunities. You're looking for something that has more upside than downside. And the way that you get an asymmetric bet, an asymmetric opportunity, is by having asymmetric information. That means you have to have information that most people don't have, which is exactly what he said right here. He thought the secret was already known by everybody, meaning he thought everybody already had the information. So he didn't have an edge. He didn't have asymmetric information. But he says here, I think the answers are still to go long. Maybe it still is enough of a secret. And of course, we know it is. If you went out to a crowded place, a park, a mall, you asked 100 people if they own Bitcoin, probably only a couple of them would say they did. Some people think it's too complicated. Some people think it's still too risky. And so we have information. If you're listening to this video right now, you have information that the majority doesn't have, which allows you to get that asymmetric upside, which is exactly what he's saying. And then he goes on to say that the cryptocurrency's rise was a rebuke of the world's financial systems. He said Bitcoin is 66,000. Is it going to go up? Maybe, he said, but it surely tells us that we are at a complete bankruptcy moment for the central banks. That's an important piece right there. We are at a it tells us that we are complete bankruptcy for the central banks. The central banks, as I talk about all the time, they are stuck between a rock and a hard place. They cannot stop printing money. They cannot raise interest rates. They are stuck. The only thing they can do is continue to print money and continue to destroy the currency, lose the value of it. And he says right here, it tells us that we are at a complete bankruptcy moment for the central banks. As a matter of fact, the central banks really defaulted. They went bankrupt in 1971. They couldn't afford to pay the debts they had guaranteed, so they broke the gold standard, and they've just inflated away the currency. So we've been kind of in that bankruptcy state since then. Now, where could it go? How high could it go? Well, Plan B, he says that he's a renowned quantitative analyst. I've talked about him multiple times on this channel. And he says that he would be caught off guard if Bitcoin remains below the six-figure mark by the end of 2021. So potentially go up another 40% just by the end of the year. He says that I do think we'll see a price that is at least $135,000 by Christmas. So that's more than 100% gain from where we are right now. He uses three different models. Again, I've talked about these, the stock to flow model. And that's typically used to look at the amount of stock, how much existing supply is there, and what's the flow, the new incoming supply, the inflation rate. So the existing stock to the new flow. And when you look at that, it starts to show you some price levels. He also uses another model that utilizes on-chain signals. So what's different about Bitcoin than any other asset is we can see on-chain data. We can see that, for example, today, that I think about almost 90% of Bitcoin held today hasn't moved for over 90 days. That means it's being held by strong hands who aren't going to sell it. It's not being bought and sold as much. And so that's bullish. We can see the size of the purchase, so we can see that there's large institutional buys coming in. And then he uses this floor model to aim for the lowest possible price for Bitcoin. So he says, if we look at the on-chain signals right now, it would say the top is at least a couple of months away, say 6 months from here. The end of Q1 of 2022, maybe later. The top end of Plan B stock to flow model pins a $288,000 price for Bitcoin at the peak of this cycle. So somewhere between 135 or 288 by the end of the cycle, 135 by Christmas, 288. Now, I want to show you a couple other things. There's this chart right here that Fidelity, one of the largest asset managers in the United States, and one of their analysts put this chart out and saying that it was Jurian Timmer, director of global macro Fidelity, said that he thinks that Bitcoin would reach 1 billion per coin in about 2 decades by 2038. That's a big number. And he talks about why, because of Metcalfe's law. As a network grows, the value of that network grows. Of course, this is a chart that he put together in his Fidelity report, and he's kind of using the stock to flow model. And you can see right here, they're saying, by 2022, we could see Bitcoin reach 100,000 a coin. Of course, we'll be there by the end of this year. That's what Plan B is saying. If we look here back to like 2026, $1 million per Bitcoin by 2026, which is, of course, only 5 years away. To go from a $60,000 coin to $1 million Bitcoin would be a pretty incredible run, and that is from the head researcher at Fidelity. Now, one thing to keep in mind about this, okay, let me bring you back down to earth a little bit. If we look at this, taking into account these changes in the dollar, the value of the dollar itself. So when Bitcoin is worth $1 million per Bitcoin, it also means that a dollar just isn't worth very much. So you need to keep that in mind. At the end of the day, we have to start looking at things in terms of purchasing power. And so he says here, like Timmer, for example, claims that a dollar invested into stocks in the 1700s is now worth almost $4 billion as the value of the dollar changes relative to other assets. So again, right, we're looking at things in terms of purchasing power. And so we can see that the purchasing power of stocks went way up, gold is okay, bond, etc. But fiat money has gone down. And so what he's saying is that in 20 years, thus it may be that 1 billion is what 1 million is considered currently. So what 1 million would buy you today In 20 years, it might take $1 billion to buy the exact same things. 20 years ago, Mark Zuckerberg from Facebook famously told 1 million is not cool. You know what's cool is 1 billion. That was 20 years ago. Now he's saying 1 million might be $1 billion in 20 years. And so that's something to keep in mind. Even if Bitcoin does get to that valuation, it also just means that the dollar is basically worthless. Now, one more thing I want to show you, and this is Bitcoin's October price. So this has been the price of Bitcoin every October. And so a lot of people think that Bitcoin is too volatile. It's too risky. Well, if we look here, we can see it was 6 cents. This is every October of every year since it's been out. 6 cents, $5, $12, $125, $380. Here in 2015 is the only year in history of the history of Bitcoin that the price has ever been lower. 2015 was the only year. Then 615, 4,400, 6,600, 8,400, 12,600, 66,000. So does that look very volatile to you? Now, what I say is that if you're looking at your portfolio on a daily, weekly, or even a monthly basis, you're never gonna make it. You need to look, especially on a new technology, look at it over a longer period of time. You should be looking at this in years, maybe even decades. And if you look at it in years, it looks way better. And it doesn't look as volatile as what most people believe it to be. But what do you think? Are you looking at it shorter? Do you think it's better to look over a longer time frame? And where do you think the price could go? Leave me a comment and let me know down below. And of course, as always, give me a thumbs up on this video if you like it. And if you don't like the video, give me a thumbs down. That's okay. But at least leave me a comment and let me know why. And that's what I got for you today. All right. To your success. I'm out.